G'day traders, Chris Weston, Head of Research here at Pepperstone. Got 9 days now until the midterm elections in the US. It could be a volatility event, and not that we need much encouragement. There's obviously been big volatility in the S&P, the Nasdaq and credit markets as well. We haven't seen on a relative basis the same sort of volatility pick up in FX markets, and one suspects that we probably won't as a result of the midterms, but there could be some interesting trends that develop around this. If we look at implied volatility in the options market around, say, dollar-yen or euro-dollar, the market's not expecting this to be a significant event, but I think that's largely down to what is discounted into markets at the moment. For quite some time, the market's of the view that the Democrats will reclaim the House and the Republicans will maintain control of the Senate. I mean, certainly we can have a look at the generic ballot and have a look at the polling there, and the Democrats have been ahead by some 7 to 9 percentage points really since September. So we've had a good chance to discount this overall majority coming through in the House. Certainly the way that the Senate is made up, there's 35 seats on offer, 26 of those already Democrat controlled, and 9 of those being Republican seats. So, you know, the Democrats to maintain a footing or reclaim the Senate, they would obviously have to have a firm showing, not just reclaiming their own seats, but also take some of the Republican seats as well. And that seems unlikely. In fact, the polling situation suggests that the Republicans may actually strengthen their hand in the Senate. If you look at the mix at the moment in the House, where the Republicans have got 236 seats and the Democrats have 193 seats, and there's 6 seats being idle, we will need to see the Democrats take or pick up about 25 of those seats to get a simple majority in that situation. And the way that the pollsters are suggesting that they could get anywhere between 25 up to 40 seats, Nate Silver's 538 model is suggestive that the Democrats have about an 84% chance of maintaining or reclaiming the House. Certainly if we look at funding and the ability to attract funding, the Democrats have significantly outweighed the funding from the Republican Party, and of course that will help them with their adverts and just trying to get their political message across, and of course that should help their voter base. I think we can also have a look at some of the events that have been unfolding and see how they play into voting behaviour. Okay, from the Republican side of things, you've seen the caravan stories playing through, you've seen the Kavanaugh appointment as well, but on the probably favouring the Democrats' case here is some of these shocking situations involving acts of white supremacist acts, and certainly I think that will favour the Democrats at the moment. And you have to maintain that situation that the Democrats have got about an 84% chance of taking back the House. So how do we play this? I think if you address the first case scenario, which is the base case, which is that you get a split Congress, and you'll probably favour a slight relief rally coming through in emerging markets, although quite a lot of that has been discounted already. Equities will probably struggle in that environment because the chance of any kind of infrastructure will be fully priced out of markets if it was ever in there in the first place. People will pare back some of those tax initiatives. People will be also looking at the potential for negative headlines coming through. We'll probably need to see the House investigation into the Russian collusion in the 2016 election being reopened. We're likely to see Trump being investigated for his tax again. The word impeachment will be bandied around as the Democrats really push that one pretty hard, although that would require 67% votes through the Senate, which of course isn't going to happen in that situation. So the negative press will probably keep the US dollar fairly subdued. In fact, we may actually see the US dollar coming off a little bit. Perhaps against the yen would probably be the best place to play that, or maybe even against the Swiss franc. It'll be interesting to see how the dollar plays in that environment against some of the higher beta names like the Aussie dollar, and also against the Kiwi dollar. One suspect you'd probably like to see a bit of relief coming through against emerging market currencies, and specifically it'd be interesting to see how the Democrats and the split Congress works with China, and trade will be obviously a big centre point of that situation. Clearly China in that situation would have a stronger hand, and the object of getting the next 267 billion of trade tariffs through the door would be lowered in that situation. The Democrats would never vote that one through. But I think the other situation, of course, is what happens if we do get a surprise. Now, polls are polls, and I think a lot of this will be down to the numbers of voters that actually turn out. Traditionally, we get about 40% turning up for the midterm elections, but I think the interest in this is obviously heightened. The media have done a good job around that, and we could be getting a larger representation playing through. It's important to note that Donald Trump's approval rating has picked up. It's at the highest level since March 2017, although its net score is still very much a negative situation. But if we do get a surprise, and a lot of these battlegrounds, these swing states, which these very, very tightly contested situations, they are within the margin of error, and therefore we could see a surprise playing through. And it's not out of the question that we could see the Republicans taking control of the House and taking control again of the Senate. Now, that is not priced into markets, and that's where we see a surprise pop in these markets. So equities would clearly like this situation. Infrastructure would become a thing. We would be talking about tax 2.0 really making its way. We would be talking about permanent tax cuts. There, obviously, the relationship with the US and China would continue to sour, so emerging markets would probably come under a bit of pressure. You're probably likely to see the US dollar rally because infrastructure supports the idea of growth dynamics, although people would be obviously focused very much on that deficit to GDP figure, which would continue to blow out going forward. And obviously people would be talking about a funding task going forward in that situation. I think it's in that situation where we obviously get a big risk on rally, but if you look at the pollsters, they have that at about a 15% probability, so it's unlikely, but that's where the pop in risk assets comes through. I think as we go through this week as well, the object of an October surprise, so either political party pulling out their main card, their controversial trump card, so to speak, is in flavour. So we could be keeping our eye on firmly on what happens there. And the other consideration is what happens when we get the result. Will we see the Mueller investigations really come up again? And what will happen with Jeff Sessions as well? Will Trump look to push him out of the way? And I think that's something that we need to consideration. This story will not die down even when we get a result. So as we go through next week, we're going to be focused very much here in Australia and Asia on Wednesday's session. That's when we get the polls opening around 9 o'clock in the morning. We should see the last state closing around 4 o'clock Eastern Daylight Time. I believe by about 11 o'clock in the morning Eastern Daylight Time, we probably should see the bulk of the real competitive states. That's where it could go either way. And I think in the afternoon of the Asian session on Wednesday is where we start to see that volatility ramp up as we start getting some of these exit polls, and people will be looking at whether the expert polls, such as Nate Silver's model, is actually even correct in the first place. So as it stands at the moment, if we look at the implied probability in this situation, is we probably will see a split Congress, which obviously leads the idea that we could even see a government shutdown being in the picture longer term. Or do we see a situation where the Trump GOP party maintain both chambers of Congress, which isn't priced into markets in any capacity, and we should see a big move coming through in equity markets and also the US dollar?